Okay. Good evening, everybody. Trust you well. Hope you've had an amazing day. The sun has been shining, so we're thankful and grateful for that. It's another installation with the Israel Keys Wealth Education Forex Education Group. As we always do, we're going to be going through some weekly analysis today. My name is Tope Pedro, and it's my privilege to be here. Cool. So, like I said earlier, I hope you guys have had a great week so far. I know it's only started today, fresh, but yeah, we should start well. Last week and the week before was quite good, so we hope this week continues to be great. Okay, guys. Okay, good. If you can see my screen clearly, I want everybody to type yes on the comment section. Okay. Awesome. So I'm just going to go through a few of the major pairs today. I'm just going to be running through everything, and we're just going to be using our standard markup that we use, our standard trade structures and straight trade, patterns that we normally use, and we're just going to go through that and see what we expect could be expecting this week or has already taken place today based on what we've drawn out from last week. So the first pair that we would have here is Aussie USD. That's the Kiwi. So I will normally just like to go straight to the daily first to see what's happening where we are. Um, and as you can see, the trend is up, to a certain extent, but we have some nice highs that we believe price, would be looking to go to. So we have that high over there. So we have at the moment we're in this range, so that high and this low at the moment. That's where we are now. Price is within that range. Okay, if we drop to the weekly, let's see if we have some highs and lows. Okay, weekly we have that was a good range that we already drawn out. Well, weekly we also have price bounced off of this weekly high last week, took off beautifully, and it's looking like price will be going for last week's high as well. If you can see on my charts there, so last week high was at this level. That's 70383 price point. That's last week's high, and I have a strong belief that we're gonna get there at least before we take out the 8th of June high. Okay, if we now come down to our favorite time frame for hunting setups, the H4. Let's look for our patterns. We're just going to be looking for stop hunts, market structure breaks, and what have you. Okay. If you notice, these red lines that we got from the weekly, that was a weekly high and a weekly low. That gave us a nice range, both the weekly and the daily time frame. And now this high over here is the high from last week that I believe we could be going for this week as a minimum, based on what has happened. And now, from what we've delineated from previous week, we've seen these H4 lows over here taking out just a little bit over here. Let me change the color from purple, from let's see, style red. Let's make that black. Okay. Okay, so this low was taken out. If I zoom in, you can see that better. So that low was taken out and price rallied up and broke that structure, which gives us this. So this market structure. And if you remember our counting, when we're counting the things, the points that we look for, point number one. So this is one has happened, stop hunt. Number two, market structure break. Number three, we'll be looking for a return into some sort of into this range between this break and this low that was taken out. We're going to be looking for a reason to go long from this area, and you can first look at maybe a H4 block in that area that created this rally up, that created that break of market structure. So that move up, that broke the structure over here. That's the origin. And we're going to also expect some intermediate market structure, I mean, intermediate stop hunt, into a H4 or H1 order block. In this case, we're going to be looking for a bullish order block because we're looking to go long. Okay. So if you drop to H1, we'll be able to find ourselves a nice entry. Okay. I will call this is a very good one. An intermediate low has been taken out by this drop. And where did price go? Let's get this daily, this H1 high over here. I mean, order block over here. So you can see that we have this beautiful H1 order block that is lodged just on top of the whole H4 order block. Okay, it is a very good point of entry. And if you notice the red line that we drew from the daily and the weekly, it's lining up nicely. So that red line is a high or low of a weekly uh, um, candle. So you can see it lines up with that H1 order block, bullish order block. And price came back down, took out this low. I'm gonna draw it out for you. This low, took out this low. Okay, took out this low. Took out this low. Okay, into the order block. Okay, that is A1 or A star setup. It's a setup that we always look for. We always look for an intermediate stop run into the order block within the range of our stop hunt market structure break of the H4. So overall trend will be up. And as you can see from last week Friday, no, Thursday night, slash Friday, we've had a beautiful run up. You might have had another opportunity to go long today. Um, if you look at, there's a small stop hunt into another H1 order block. So look at this H1 order block. If you draw that out, so if maybe you missed this first trade over here, you could have gotten a second one here with this H1. Actually, I'm going to take these two candles together. Okay, so you'll have been able to get in here again because stop hunted, this candle, this move down, stop hunted this intermediate low into this order block. This would have been another entry opportunity. So the first entry would have been here and the second would have been there. So two entry opportunities for you. First would be here and second would have been here. Okay, what would have been your target? Our target would have been this high that was formed on the H4. So after the initial market stop hunt market structure break, rally of the high it created, once we enter the trade here, that will be our target. So if you're in this trade, you can look for 70383 as a target. Okay, that will be a good target for you. Okay, so let's go to the next pair. This is not really a major pair, but we can look at it. I was analyzing this a couple of weeks ago, and this was my prediction for this trade. And as you can see, it hit the spot nicely, and it traveled, hit the first target over here. That was the first target that I was looking for, and the second target was this H4 bearish order block. And as you can see, once it got there, there was a huge reaction. Okay, huge reaction down. So let us delineate this again on our H4. Let me delete the the objects here. Okay. All right, so if you go to our favorite time frame, H4, so at the moment, this is what has happened. So the trade that I took from here was from here. So we had this stop hunt, price rallied, broke structure over here, and instantly gave me the mindset that if price returns within this range over here, within this range, so 1.1, point number 2, I'm looking for number 3. So I'm looking for an entry in that area. And what I marked out was this huge H4, sorry, this H4 order block over here, bullish order block. Okay, it was the one that created this move up that broke structure. Okay, and as you can see, price dropped down nicely into it. And the next thing for us we'll be looking for entry setup within this area. You can see it spent 1 to 3 days in here before it kicked off. Okay, so that was how that was what my long trade was based off of. Okay, so now what I want to remind you is this setup that we show you is a standard setup that continues to occur, and you can modify it as you go along. The setup doesn't change. If you're able to identify 1, 2, your 3 will be easy, your 4 will be easy. Those are just entry points, okay? But identifying number 1 and number 2 is the main, issue over here. So now, as this setup is taking place and this move is going up, I would be doing this again. So let me remove this. So you can see there's a low here, okay? That is a low, a significant H4 low. Price went into it and rallied out to break a structure. So you can call that a breaking structure. I would mark both out anyway. So now I've got my 1, I got my 2. Let me see if I can put so this is my 1. And this is 2. Okay, one has happened. The stop on market structure break. 3 is the next thing I'm looking for. I would have then drawn out my origin, probable origin to come back into. So I'll be looking at this area and then this candle over here. This will be teaching you what this kind of candle means. This candle here is a manipulation bar. Okay. So two possible points where we can see reaction if price comes down in this area. Okay. Are you with me so far? So three possible two possible areas for price to drop into. So we could see stuff like this happen. Okay, stuff like that happen and run to this high, or it comes to this low and goes up. Okay, so that then we can also look at quickly take a look at our weekly to just have a snapshot of where we are. So on the weekly, we have a weekly high here, which I will be targeting. So this weekly high is a probable target once price comes down to our entry. This weekly high over here, we could be looking for reaction around that area. This weekly open of price is another reaction area, and this weekly high here. So I just normally mark maximum 4 areas that I'm looking for reaction. And if we go back to our H4, you will see some sort of confluence around those areas, okay? Some sort of confluence. So you can see, look at that weekly open. A price can come around there and we could expect something magical to happen there, okay? So that's something you can look out for on Euro GBP. And at the same time, because let me get this weekly high properly. Okay, it looks to me that we've already hit a high. The weekly high. In fact, as of today, we've already taken out last week's weekly high on Euro GBP. So we kind of have a different setup now. So if we see this, you can see this high, significant high over here. Price rallied past it, and then we have a market structure break at this level. Okay, so we could see price do this now. So after this drop that we've come here, this drop down, we could see price go back up to this H4 bearish order block. Okay, for a drop down. Okay, for a drop down. Okay, for a drop down. But I'm still very much we should still put this weekly open, this red line here could still create a significant reaction to price. But the good thing about it is what we have to do, we don't need to second guess. All we have to do is to wait, let price do what it has to do. And then once price shows us its hands, then we take the trade. So for example, how are we going to enter the trade? And we can enter the trade based off of H1, or we can enter based off of 15 minutes. My personal favorite recently is to wait for H1 candle close. So if I got, for example, let me go to H4 now. So you can see at this very top here, last week high, you can see there's a H1. Let me give you. You can see this significant H1 candle, this blue candle, this big one. Let me point to it. This one. Okay, for me to take a trade at this point or get a confirmation, I would wait for another H1 candle to close below this bullish H1 candle. Okay, the reason is I'm waiting for like a solid confirmation that that point is a solid reaction point. So when I get a H1 candle close below, okay, you could take this H1 up here as well. Okay, once this H1 candle closes below, so we're looking for a bearish candle to close below a bullish candle. This candle that rallied up into that level, once you get a H1 candle that closes below it, that is giving us a guarantee, a confidence that this trade is going to go south in our way. Okay. So the same thing at this reaction point, this area here. If price gets to this level and I see a bearish, so let's assume this candle I'm drawing now is bearish. Okay. Let's fill that with red. Okay, a bearish candle. I'll wait for a bearish H1 candle. I'll wait for another H1 candle to close above it, but that candle has to be bullish. Okay, let me paint it blue. So once this candle formation happens, that gives me the confidence that the trade is going long. And this is what Israel says. It calls this the engulfing candles. Okay. So at those points, you're looking for H1 engulfing. Once you get that H1 engulfing, that is a good signal to go. Okay. Right, let's move on to the next one. It's no, not EJ, Euro USD. Let's go on the weekly. Let's see where we are. On the weekly, there's some nice levels to target, juicy levels. So you could, this one is there for the taking. This last week high is there for the taking, which we just took today. We could get some sort of reaction down. Who knows? We'll be looking at this weekly high over here. I'm normally going to mark 4 levels and this weekly high over here. Okay, those are the closest to my price at the moment. Okay, so let's go to our favorite time frame, H4. Wow, look, those lines are crazy. The lines we drew from a few weeks ago, look at that week high over here. Look at the reaction on it to push price up. Anyway, so how could we have taken advantage? I think Israel gave us some setup last week. Some a really, really nice, juicy setup last week. Okay. I'd started looking at Euro USD from this level when he stopped onto that H4 level here, and then we had a market structure break over there. So I'll use an arrow to point what I'm looking at for you. So this level was stop hunted. This level was a market structure break, and almost like the following day. So let me just show you what I'm doing. See the blue line, you can see the blue dotted vertical lines represent 1 day. Okay, it represents 1 day. So that so that's telling us that on this same day when we had a market structure break, the following day we had a beautiful return into that area, bouncing right off a beefy H4 um bullish, bullish order block. And as you can see, price just touched nicely here. We had a beautiful, if I'm not even going down to H1, a beautiful engulfing on the H4. Look, that H4 candle closed above that um bearish H4 candle. Let me try for you. So we had engulfing here. Okay, we had an engulfing. Once that H4 closed, look at the next H4 came, bounced off, and price just flew up. Okay, price took off. So that will have been a very, very good trade for till now, in fact. And you can continue to track this. The other thing that I find is after we've got our initial stop on market structure break entries, the other ways to just trade this is looking at market structure breaks. Okay, so once you see a market structure break going higher, you should keep anticipating that price will continue in that direction. So you could either look for more setup. Look, another setup exactly. The stop hunt into where this there's a beefy H4 candle over there. Okay. So we had a stop on into it, and then it created another H4 engulf. When it engulfed that previous H4, look, beautiful. This would have been a beautiful setup for you. Engulf of this H4, and you'll have put your entry at the top of that bearish candle. The next H4 price came in, touched it, and boom, you've entered the trade again. And as it continues, you find what again? There's another market structure break over here. Higher. Look, there's a break higher, which is telling us, okay, we should keep looking long. Okay, keep looking long. And once price retrace back to that level, look, we have this H4 order block over here. Yeah, price bounced off of it. We had this beautiful H4 engulf. So now, as I'm telling you this, you can take a look at this on the H1 as well. So to help us reduce our stop loss and risk and all that stuff. So The same thing, because price is very fractal. Exactly what I'm showing you here on the H4, you can assume the same on the H1. And look at what happened. We had this H4 engulf this bearish H4. And what happened? Price came back down into it and it's going up now. And here is our probable next target, 1.14950. You can see there. Okay. So if you've caught this trade, if you're still in it, keep holding. Okay. It is a good, beautiful, beautiful setup. Okay. I mean, if I'm to be finicky, extra, like if I'm being extra anal, I could say this is another setup. Okay. Look at this. Look at this low. Was stop hunted. Yeah. Into this H4 order block. Market structure break over here and return. So this is our 1, our 2, and it's returning into this H4 what? H4 order block. Guess what? If I guarantee you that if I went into a H1, you will see an intermediate low stop hunted into that order block. Okay, look at this. Check this out. Intermediate low. Look at that low over here. Intermediate low, stop hunted. Price stop hunted into the H4, and boom, price is going up again. Okay, so our target could be here. This is the next target, that high. And Mike, you're asking a question that whilst looking for engulfing, do we ignore the wicks? I don't ignore the wicks. I like the engulf candle to close above the previous candle totally. Okay, so the to close above the high of the previous candle that is engulfing, or whatever candle I'm looking for the engulf to work on, it has to close above it. Okay, so the whole body, not just a week. Because if it's just a week you're looking at, that could just simply be a stop hunt that's taking place. So price could be reversing. But when you wait for the candle to totally close above or below the area or the candle in question, then that gives you a strong confirmation. Oh, Esther, you said, how can you tell if it's open or closed? Well, that is trading 101 and in candlesticks. I think one of Israel's videos has addressed that, but let me just take you through that quickly. Okay, let me change this to a line chart. Setting. Let's change our line chart to white. So we just blank everything out. Okay, I'm going to be drawing you a candle. That's why I'm doing that. Just bear with me. Okay, Esther, quickly, I'm going to do this. So every candle, yeah, every candle has an open and a close. Okay, every candle has an open and close. And the next thing is every candle has a high and a low. Okay, so this is just a crude candle I'm drawing for you. Let's assume this first candle I'm drawing for you is a bullish candle, and this next candle I'm drawing here is a bearish candle. Yeah, I'm just flying quickly for you here with this. Okay, let's paint this. We're gonna paint this red to show it's a bearish candle, and we leave this blue at a bullish candle. Okay, so this is it. Every candle has a high. You can see this, the very top. The high is a high. Okay. Yeah, I don't know as I can explain to you. The high is the highest point that price has rallied within that candle time frame, but it's called a high. Okay. The high is constant. Two things you'll always know most of the time. You always know where the open is. Okay. That one is standard. But let's move on. Let me just show you this quickly. High. Okay. So this is a bearish candle, and this is a bearish candle, and that's a bullish candle. And then the very bottom of any candle is called, you guessed it, is called what? What? It's called a low. Yeah, it's called a low. Yeah, same thing for um a bearish candle. Now, Esther, your question that you're asking is how can we tell if it's open or closed? So now, every bullish candle, don't forget this, every bullish candle, the way I explained this to my son, my 11-year-old son, because I was telling him, teaching him about trading, he's like, think of a skyscraper, okay? Think of a skyscraper. If it is bullish, as in you're building it up, you're always going to enter the skyscraper or start the building from the bottom, okay? From the bottom. You're always going to start from the bottom, okay? So I said, you can imagine, you have this skyscraper, you want to go to the 10th floor. You're always going to start at the bottom. So now you have this, so your candle always have 4 points, okay? 4 price levels, sorry, 4 price levels, 4 price levels. And the 4 price levels are, you got the open, you got the close, you got high and low, okay? You can repeat this to yourself wherever you are. You got the open, you got the close, you got the high and the low. Okay, so I was telling my son, I said it's like a skyscraper, okay? The bullish candle is a skyscraper. You're building it up. Okay, you want to build it up. I said, but when you were building, you had to go and give it a foundation. Okay, there's a foundation. So you went down, you built some foundation. That's the low. So the very lowest point of that building is called the low. I said, so as you're coming up, you now built some garages, underground garage and everything. And then this is the first floor of this skyscraper, where they welcome everybody, welcome and all that. And then depending on how posh or rich you are, you can then move to whatever level you want to go to, the penthouse and all that. And I told him the close at the top is is the how I explain this. What I told him, I just told him this was a penthouse, okay, the very very top, where you couldn't leave. So the highest point is the high, but the close at the top is the highest point anybody could leave, or the highest point where you could have an apartment, okay. And then I now told him the very high is, those thunder arresters that they have in very high buildings, yeah, to prevent, to just um, induct the thunder strikes, or let airplane know that there's a high building where you got lights flashing and all that. That is the high of the skyscraper, okay? That is the high of the skyscraper. So every candle have this 4 points. You have the low, you have the open, close, and high. In the case of a bullish candle, your open is always going to be at the bottom because you're looking to go up. Okay. Esther, how do you know the candle is closed? Is when you see it closed. Basically, when the candle is complete, when you've seen the open and you've seen the close. Okay. In the case of a bullish candle, you will have seen a full formation of a candle that you've seen it open at the bottom and close at the top. That is a bullish candle. That tells you the candle is closed. Okay. For every candle to show up on your time frame, it means it is closed, obviously, unless the one you're watching as it's currently forming. Okay. So let's move over to the bearish one. And then the same thing I told my son for the bearish one. I said this time it's still a skyscraper, but you're looking to come down from the building. Okay. Now, if you're looking to come down in this skyscraper, it means your open is going to be at the top here. Okay. This where you are. You're coming down. So your open in a bearish candle is at the top over here. The high is the highest point. So the high of both bearish and bullish candles never change. It never changes. The highs, the position of the highs of candles are always at the top, and the lows are always at the lows. It's only your open and close that changes depending on the type of candle. In a bullish candle, like we said, the open is at the bottom because we're looking to build the skyscraper up. And in the case of the bearish candle, we're looking to come down of the skyscraper. So in that case, when you're coming down, where do you exit the building? At the bottom. That is your close. Okay. Yeah, thanks, Israel. Yes, you always wait for a candle to close before you, take, take action or do anything. Don't just jump into it whilst the candle is moving and all that stuff. Okay. So Esther, I hope you have a good understanding of candles now. Although it's a crude, this is the way I explained it to my 11-year-old, and it made sense to him. And I'm getting him to predict the direction of the market just looking at daily candles for now, and he's doing a great job so far. So if he can do it, I'm sure you can do it. I'm sure you can do it. Okay. All right. I'm gonna clean this out, and we're gonna go and see pound USD. Cool. Okay, GBP USD, where you at? Over here. Today I missed a great trade today over here. I was like, oh, but well, we'll see. Another day, another dollar. Okay, so for pound USD, let's go to the weekly. Let's see what we have. So the levels definitely I was targeting or will be targeting will have been this 2 weeks ago high, which coincides with 4 or 5 weeks ago, the high for 4 or 5 weeks ago. That was a very, very good level. Okay, it's a very good level to target. And then 3 weeks ago, the high of 3 weeks ago, you can see, and the open, it's open. Those will be the levels that I'll be marking out for looking at this week, and then this high over here. Oh, where is it? This weekly high. Okay. So if we then go to our H4 level, you see why this trade was beautiful from this level. Instantly, you can see that we have a stop on over here, but it will be more pronounced on the H4. Let's go to the H4. Let's make this screen bigger. Okay, so we start from here. That low. Okay. Market structure break. Return. So we had this low taken out. Price came, broke a structure. So this is one. This is two. Broke structure, returned in, couldn't go further because there was a lot of bullish pressure. It only stayed on this manipulation bar and took off from there aggressively. Okay. And as it did that again, it created new levels. So we have this low again, taken out, market structure break. This one, you need a trained eye to see this, okay? There's a market structure break that high there. So you can pick this high because it was in the same candle. It came, took it out, and then rallied, took out that high. Yeah. So it was this low. Let me put a pointer there. This one, you need your eyes to be peeled to get this kind of trade. This low over here was taken out. My MYKK, can order block and stop loss and stop on happen on the same candle? Exactly what you can see here. Exactly, what you can see here. So, and then we had a market structure break over here. So what has happened? Next thing, let me zoom in a little bit for you. You can see we have our bullish order block within lodged beautifully between that level. Projected out. Man, this is a killer. This trade is sweet. And look, price came in there nicely. On top of what is that red level? That red level is either a high that we drew from previous week. I think it's a high. Look at how they reacted at that level. This is not just trading. This is exclusive. Israel Keys Wealth Group trading. Okay. So these things happen. I don't know what else to say. It is repetitive in the market, and it came nicely onto that H4 level and took off. And as it took off, what happened? This bullish candle engulfed this bearish candle. And as it engulfed, this is just if you wanted to just use H4 to trade, okay? Look at the high of that H4 candle. Look, price came into it nicely and what? Took off. And as it took off, it kept leaving levels for you to enter again. Look, another engulfing of that bullish candle. Look, again, entry, boom, entry. So it took, so you got this, you got one entry here, 2, 3. That will have been you done for like next 4 weeks. Okay. And then this rally down, we know why it did that because it was still going back to this level over here, this bearish, bullish order block over here. Yes, we've gone into it. Look, it came back into it again. Gave us another entry here. Up we go. Okay. And as you can see, we've not had any setup to give us indication of bearish momentum. Okay, everything is still a bullish momentum. Yes, Idroki said the elephant can't hide its track. Perfect, correct. And as you can see, another hateful engulf again. What do you know? Price came back into the level. Let me use my red arrow again, and that level is exactly on a hateful high. I mean weekly high again. Look, although this one would have tested your patience a little bit. Okay, look, and I can guarantee you'll have see all this trade that you found on H4. You'll have seen beautiful setups on H1 as well, which will have reduced your risk. So it means maybe a 3-to-1 that you'll have gotten on H4 will probably is giving you or 6-to-1 on the H1. Okay, let's just see. Okay. So from here, from this first opportunity over here, look. Because this H1 engulf of that, look, how many pips is that? From there to there. 16 pips. Yeah, 16 pips. And you'd have gotten how much? Like, if you captured that move up, let's use this. Okay, let's use this. So stop loss there, TP at the top there. Look at the ratio. The ratio is a 9 to 3 ratio. 9 to 1, sorry. Yeah, beautiful trade. And then you back that, you came for the next one over here, this H1. You entered at the top of this H1 candle, went up again. This is another 4 to 1. Yeah. What if you held it? You held it all the way through there. Excuse me, let me do that properly. 7, another 7 to 1. Yeah, if you took it all the way to this high. Yeah. Or you entered again at this H. Look at this H1 engulfing, or this H1 engulfing here, this small, this one here. Look at that H1 engulf of that H1. You enter the trade here. Stop loss was how many pips? I don't even know, like 10 pips or so. And then look at your take profit. There's another, let's say 6 to 1. Yeah. Simple. Simple. And then this, you knew this move down is still gonna happen because we were still looking for reaction on this H4 order block. And guess what? Where did it go to? If we're being really like analytical, look at this H1 order block over here. Okay. Look, bang, bang, right into it. There. It's just beautiful. Okay. And that was why I was looking for a trade here, because I was still looking at this H1. Look at this H1 engulfing. Don't go away. Where are you? Let me show you to everybody. Look. Look at this H1, and you got this bullish H1 engulfed it. If you draw that out, yes, it was there a few days. We'll give it because it was Friday. It would, it was delaying. And look at this. Boom, up. Guess where I was going to enter today? I was carried away. This is where my entry was going to be. Let me show you. Let me zoom in. Let me draw this line for you. You see this H1 candle? Okay, let me draw it properly. You see this H1 closed above it. The next H1 candle entry, look at it, it returned back to that H1. That will have been my entry. And check this out, guys. So my stop would have been how many pips? 12. Okay, let's just say it's 12 pips. Yeah, let's say 12 pips. To get what? To get 120. Let's just call it 120 pips. That's you done for the week. Israel said it's still money missing that trade. Same here. Same here. I missed that trade totally. Totally, I missed it. But you know what? The market is always here and the opportunity will repeat itself. But guys, do you think you can practice this simple phenomenon, this simple price pattern that we're showing you? Okay. Just mark your highs and lows, weekly highs and lows on you know, mark your weekly highs and lows, and then go onto your H4 and look for our 1, 2, 3 pattern. That is all you need. That is all you need, guys. Let me remove all of this. Okay. No, remove my annotation. But it's fine. Okay. So look at this. If I were to mark this, look, it stop hunted that low. So it stop hunted. So today is Monday, that's Friday. Friday stop hunted Thursday. Okay. The broken structure. Look, there's a structure high over there. See, this is where you need to train eyes, okay? Like you'll be like, I'm sure some of you might have not seen this. Look, yeah. Remember when I told you three candle formation structures? Yeah. Look, look at this. This is the reason why I was going to take a trade. So we got a stop on of this low. We got a market structure break over here. This this spike high is a structure break. And guess what? We came back down into this H4, but within that H4 was a H1 that I was talking about in here. And then look, beautiful explosion. Guys, excuse me. And the target is definitely going to be some weekly highs over here. MYK says, can we add zero to the 1, 2, 3 pattern where zero equals order block creation or zero implied? Well, you can add zero to say it's your order block. But what matters, it doesn't even matter what name you call it. Are you able to identify it on the chat? That's what you need to practice. In fact, I would like you guys to go home tonight, get a notepad, and just if you can close your eyes and not close your eyes per se, but if you can visualize this pattern, okay, this pattern I'm looking for is there's going to be a low here, price will run a low, it is going to run another high, label it. So stop on market structure break, draw a candle to say that's the origin, price returns the origin within the range of the point one and point two. So that will be your point three. And then you enter your trade, point four, and price moves up. Okay. I think you guys should do such a homework. So, does anybody have any question tonight? I've had a good time so far. I hope you have. Any questions? Awesome. Esther, yes, it was good. Thank you. Brilliant. I'm glad you like it. Gerald, MYK, awesome. Dollar index, Mr. Israel's favorite. Okay, let's see if we can find that. I think I had it somewhere in my chart. Dollar index, dollar index. Ah, here it is. Dollar index. Okay, let's go to the weekly. Oh man, this is serious. Okay, so 3 weeks ago, the low, and then we're looking at last week's low. So let me put this low here. So we're looking at June the 1st low. It's a possible target. And we're also looking at last week's low. Okay, last week's low. I've been tracking this as well. Israel. That's why you saw this markup on there. Uh, so as you can see over here, we have this is definitely a low that I believe US dollar is going to go for. If not, we will have a stop on of yesterday's low and then break structure and go up. But this is what's looking positive now, possible as well. Okay, so as you can see, like I've marked out from previous week of tracking. We have this high taken out, I think on Wednesday or so last week. And then this market structure is broken. So point one and point two, we're now looking for a rally back up within this range to see a further drop down. And as you can see, we had some sort of reaction at this level here. Okay, let me draw that out. It was some pips short of that bearish order block, but I would still take it. Guess what? Because this candle engulfed that previous H4 candle. To me, that is a valid signal. I like this kind of stuff. Reaction. Look, that level over here. And once it gets there, I would zoom in into the H1. I don't think this will let me do it. It's going to prevent me from going lower. Oh, brilliant. Now look at this. It went, so it took out this intermediate high into this level. Oh, guess what? We have another H1 or the block within that range. No wonder it reacted there. Beautiful. There's a double confluence for us. Okay, no wonder. And look, price rallied into it, and I'll be looking for a H1 engulfing. So look at this bearish H1 engulfed this teeny weeny H4 over here, H1 over here. When it engulfed it, look, it returned back into it and dropped crazily. Okay, as price is going down now, I'll keep my eye on this level, here. I'm just saying I'm keeping my eyes on it. Okay, if I see some sort of reaction at that point, so if I see an engulfing H1 here, then I'll be looking at my Euro USD and Pound USD to see same reaction, if I'll be getting a reaction off of where they are now. Okay, I believe it's likely to go for this weekly low. That's what I want, because Euro USD is close to its own weekly high. Okay, and let's go back to Euro USD to just see. So week, look, it's already at the weekly high. It's already at last week's high. The only next level is this high from 9th of March. Okay, so we'll just keep that for study to see what it's going to do when price drops back to this level and this level over here. Okay, but at this point is also a very good point to identify what price is going to do. And as you can see, there's some sort of reaction there. Okay, price has already dropped down, but I've not seen anything on dollar index. So price is not moved yet. Okay, it's not giving me an engulfing. Let's see GU. Have you seen a reaction? So now, if you notice, GU is dancing closely to last week's high. It's a trick. I believe that, look, last week high and 3 weeks ago, I believe they want to take that high as well. So if they take that high, and US dollar takes that weekly low that we marked out, that's a beautiful correlation. And then whatever reaction US dollar takes at this low over here, this weekly low over here, will be taken opposite on the US dollar and euro. Uh, we'll be taking the reverse, sorry, on euro and pound USD. Okay. So for me, the short is still in play. The short is still in play until I see some sort of reaction. Like I said, at this level that I drew out now, if I get an engulfing, an H4 engulfing, that'll be brilliant. That'll be brilliant. So I'll be looking for an opposite reaction on pounds and euro. Okay. With that much said, I'm in the garden. My fingers are freezing. Yeah, we'll call it a night today. Okay. Thank you very much for your time, guys, and wishing you all the best. See you soon.